Hello guys, so today we have GBPUSD. I had two trades. I had a trade during London session. I had that was a sell, and then I had a buy trade during the New York session. So this is basically a quick review on how I took the trades. So on the daily time frame, price made a swing low, a swing high, a low, a high, a low, a high. All right, mitigating this area. Then price came to this order block. Then price went up, and I was expecting price to take out this high. Price failed, came back to this area. So this is a decision point where a decision has to be made as to either take price up or take it lower, because we've come back to the order block that had taken price up, which failed to break this high. All right, so let's go to the 1 hour time frame. Now within the 1 hour time frame, we see price making a high, a low, a swing high, a swing low, a swing high, a low, a high, a low, a high, a low, and a this swing low could have come to this area, but I'll show us. Let me zoom in. So basically, this horizontal line you see here, this is previous week's high, and this was the low for last week. So this was the low of last week. Then price went higher. We made a low, a high of the week, a low of the week, a high, a low. Now these areas are liquidity points. So in the morning when I woke up, this was Asia. This whole move from from this candle to here, this is Asia. All right, now Asia had this break in market structure. If I show us, this is a break in market structure. This is on the 1 hour time frame, and this candle, let me zoom in, this bullish candle is an order block. And the reason it's an order block, it's because it's because it's the last candle, it's the last up candle before a bearish move which broke structure. So this is an order block. Now if we go to M15, let me do this, a replay. So this was the opening of London session on this candle, this bearish candle. This horizontal line, remember, this is previous week's low. Now I was watching the market. Basically there was a beautiful trade which I missed, because this is a break in market structure. Price is below, we are still, even though we've been going through this horizontal line, the previous week's low, however we are still below it. Now this candle came to retest this structure that has been broken. You can see a break in market structure, and M1 you can see a retest of this structure. So if I had entered a sell right here, I could have caught about 35 pips, which is okay. I didn't miss anything. So there was a brother who sent me a text. He was asking about what do I think about GU. I told him as long as price is still in this range, we are praying around this order block which I highlighted on H1, and as long as we are still below previous week's low, the market is bearish. However, if price breaks above previous week's low and above the order block, all right, in this way, then the market is going to be bullish and we would look for buys. But the moment we look for sells, and that is what I told him. So as I was watching the market, this is what happened here. I went to 1 minute time frame to see if I could see anything. I was still waiting. Now I noticed we have a break in market structure. Look at this. We have, I beg your pardon. We have a high, a low, and this high failed to take out this high. Can you see that? A swing high, but this high could not make a higher high. Actually, price came and took out this swing low. That means we have a break in market structure. This is not a smart money reversal, because as a smart money reversal, we need to see something like this: a high, a swing low, a swing low, a swing high, breaks this low, and then it comes back in this range, and we look for whether order block or FVG, whichever you look for, but I like both of them to be present. So now I entered on this. This is where my entry was. Now this is M1. We are still below this order block, which I showed us on the 1 hour time frame, and we are still around this horizontal line, which happens to be previous week's low. So if I were to switch to H1, all these moves you see, all these candles you see that are above this horizontal line will be seen as wicks, rejections. So, and my target was this low. This was my target. The reason is, let me explain. If I switch to H1, let me remove this. Look at H1. H1 came here, took out this low, and this seems to be a rejection. Now, this rejection is so huge. If you check from here to here, this is about 27 pips. So I knew, but then when you check to M30, you realize actually it was a break in market structure, and then we have to retest and then continue going down. But no matter what happens in this scenario, you'll find that when this wick is created, smart money is going to pull back, maybe take it out, or maybe slightly in the middle or here, and then this candle also start pouring up and close, and will close in here. People call it as in like what is that, filling the wicks. I've heard of those terms. For instance, look at this. This candle went up, then came down and closed here. The second candle also went up, failed to take this week high, then it closed right here, and then price went lower. So I knew, or I give you another example. Look at this. Price went up, failed, came down, closed in this range. The second candle also went up, took it out, and it closed lower, and then price started going bearish. So I think you understand what I mean. Same thing here. So my target was this low, not to be taken out, but slight somewhere here. All right, so let's go to M1, back on M1. So my target is going to be here, not to be taken out. So entry and my stop above this high, and my take profit right here, that is about 1:5. So let's go, let's see what happened. Let's switch to M5. And right there, we did not hit it, but I think this, I took my profit on a 15 minutes candle. It was on this candle right here. My target was here, but when price came here, I was happy with the profits and I could not hold any longer, and I was out. Yeah, so all right. So now the second trade, let me remove these annotations. Let me remove this as well. This, this, and this. Okay. Price. Actually, price did hit my horizontal line. Okay, this. Okay, now price came back, and I noticed something. The first time, price could not go higher than this. But this time, price took out the order block. This order block was taken out. And another thing was, the reason why I was looking for buys now was because this move failed to take out this low. We could have made a swing low like this, then we continue down, but price could not take it out. So that means there is like the smart money to me are willing to take price higher. So now price has come above this horizontal line. Remember, this is previous week's low. Here, the trade I took was from here. Price was below it, because remember, any liquidity taken, if price does something like this, and you expect this to be liquidity, and price goes and takes this liquidity out, this buy side liquidity out, this horizontal line will act as a support or as a resistance. That means price could come, bounce off this and continue going up, or it will come back in this range, then retest this, okay, and then continue going down. In the process of retesting this, on the lower time frame, that is where you are going to see a break in market structure. So in the lower time frame, you are going to find something like this. A low is broken, we come back here and we break it. All right, so this is what you're going to find on the lower time frame. So we break this structure, price does a retest on the lower time frame, M5, M1, M15, M2. This is what you're going to find. You may not see it on the higher time frame like M30, H1 that there was a retest, but if you go to the lower time frame, you will find that there was a break in market structure here. All right, so when you put something like this, a liquidity pool, and price takes it out, don't remove it. Watch what happens to it on the lower time frame. You will be surprised. All right, so price now is above previous week's low. We are above the order block. We have FVG right here. Right here. Now I was watching M1. M1, I realized that price has also broken structure on M1. Can you see it? Previous week's low taken out, retested. We have fair value gap on M5, and now price is retesting. I use my retracement levels. We have an order block right here, and my entry was right here, my stop loss right here, and my target was these weeks. All right, so price went up. Have we entered that area? I close at 1:8. As simple as that. So I hope you have enjoyed this video, and I hope you've learned something. Just as a reminder, remember, when your liquidity pool is taken out, it either acts as support or as a resistance. It's where you can look for a smart money reversal, a break in market structure for your entry. So until next time, I hope you've learned something. Please subscribe, share to your friends, to your trading groups, and I'll keep sharing this information. And of course, the credit all goes to ICT Michael J. Huddleston. And all right, guys, be blessed.